Hello, members one and all of the Salivation Nation. Well, some disheartening news for some of us. For others of us, it's really not that big of a worry. The demand for gold has dropped to an 8-year low, and apparently it's not so shiny anymore. Around the whole world, the demand for the precious metal has fallen to its lowest level since late 2009, according to the World Gold Council. In the third quarter of 2017, demand for the Haven asset was 915 metric tons, 9% lower than a year earlier. Here we can see the chart showing the fact that it's down. 09, the demand here, it dropped here in 2009. And so here, the last quarter here of 2009, we see where it is, and now it's just above that. Stock markets have been setting one record high after another this year, so investors have seemingly decided they don't have much need for gold. Often bought as a hedge during downturns, total investment demands for gold dropped 28% in the third quarter to 241 metric tons compared with a year earlier. Gold-backed ETFs recorded a severe drop in inflows, down 87% from last year. I think the one thing they're leaving out is the cryptomania that's out there. I think that some of these people who have bought these gold ETFs are moving to Bitcoin. And I think that's why you're seeing the severe drop of inflows of the gold ETFs. I think some of those in the physical marketplace are also buying into some cryptocurrencies. But there's a dual investment strategy there in many cases where some of these people are taking the profits and buying gold with it. Or they still hold some gold and are still buying some gold, but not as much as they would because they're trying to find opportunities in Bitcoin. Investors are reluctant to bet against the stock market. The World Gold Council said in its latest report on the market, it's not hard to see why. The S&P 500 is up 15% this year and just clocked 104 months in a bull market. And of course, the World Gold Council doesn't mention, at least according to this article, they don't mention the cryptocurrencies and Bitcoins. And that's just it. You know, that's the one thing that's holding me back from Bitcoin or the stock market. Every time it goes up, means that it's less likely to go up more. In other words, we're getting what most see in both spheres. You know, you've got the Bitcoin on one hand, and you have the stock market in another hand, and they're both at record highs. Well, how much more can it go? How much higher can it go? The more it goes up, the less likely it is to go up even more. And of course, I said that back when Bitcoin was $3,000 a Bitcoin, and it's more than doubled that now. Well, will it go to 10,000? Will it go to 25,000? Who knows? It's largely untested. The S&P 500, the Wilshire 5,000, and the Dow 3,000 is, you know, what's up with those? You know, they're at record highs too. It's largely kind of untested as well, but nonetheless, most analysts say that both of them are in a bubble. And so if most people say that, then it's a risky venture to put your money in those. And then you have the geopolitical aspect with the escalating war of words between the U.S. and North Korea hasn't convinced people to hoard gold in recent quarters. U.S. demand for gold bars and coins this year is the lowest since 2006. And again, that's in the United States. There are still some keen buyers of gold out there, mainly a 17% increase in China, making the world's biggest contribution. The Chinese investors are turning to gold amidst worries about the potential depreciation of the yuan and government restrictions on real estate investments. Central banks also stepped up their purchases, with demand rising 111 metric tons in the third quarter, 25% higher than the year before. Almost all the buying came from Russia and Turkey. Also, for the first time since 2010, there has been an increase in demand for gold used in technology, such as memory chips and 3D sensors. So that's its commodity aspect. Quite interesting indeed. Well, what about the prices for gold? You know, that's where we're seeing. And aside from all that, and all the hype around cryptocurrencies and the stock market, gold is actually holding pretty steady, all things considered. And really, the same thing with the other precious metals as well. They're doing fairly well with the demand down and the stock market's up and everything's high everywhere else. And, it's kind of reflecting in a sense with gold and silver as well, and platinum and palladium and rhodium, which is, again, the king of the precious metals at this point. But, a lot of the increase in gold could be because of the increase in demand in technology that we just read about. But the counter argument is according to this opinion piece on Kitco News, that gold is about to break out. And here's why, from Sarah Benally. Gold's major headwinds seem to have been priced into the market, and that's why one analyst says the metal is setting itself up for a year-end breakout. Looking at both gold and the SPDR gold shares prices, Albright Investment Group's founder Viktor Durgunov says even the technical picture is looking bright for the yellow metal. We see a clear uptrend that materialized in late 2016. There is a series of higher highs and higher lows. And recently we can see that GLD appears to have made a double bottom at the $120 level. The ETF hit $120 in early October, bounced, came back, retested it, consolidated it, and now appears to poise and move higher. Fundamentals are also tipping in gold's favor, he continued, noting that rising inflation, a weaker U.S. dollar, relatively low interest rates, and the possibility of geopolitical and economic instability are all in the cards. These instrumental underlying factors seem to be aligning beautifully with an extremely favorable technical image as well, leading me to the conclusion that GLD gold prices are significantly undervalued and are likely to retest this year's highs before ultimately proceeding higher into year-end. The new trading range for GLD, which I anticipate will be reaching early in 2018, is expected to be between $120 and $137, which coincides with roughly $13.50 and $14.50 in gold. Despite recent pressure, the gold market moving higher Thursday settled the day at 3% higher at $12.87 per ounce, while GLD last traded at $122.17, up 0.44% on that day. Looking at each fundamental factor more closely, Durgunov suggested that the U.S. dollar and U.S. stock markets, which have both been stealing away investors from the gold market, seem ready to reverse. Although the buck has mustered an impressive counter rally of nearly 5% over the last 2 months, it is unlikely that the upward momentum will be sustainable over the long term, he wrote. Inflationary pressures are likely to be overpowering for the fragile currency and are likely to push the buck back down going forward. This will undoubtedly serve as additional favorable tailwind for the yellow metal. As for the Federal Reserve's December rate hike, it is already baked into the gold price, and so the metal has little downside risk moving forward. That's actually a good point. The market is not expecting another rate increase until June 2018, giving gold an increase-free interest rate environment going all the way into mid-2018, he added. The metal will also likely remain floored by safe haven demand. There are plenty of tense geopolitical hotspots around the world right now, not the least of which are North Korea, Saudi Arabia, Syria, and Iran. Fears of a military conflict with North Korea have subsided in recent months. However, they can't be ruled out altogether. As the rogue regime continues its nuclear ambitions in the face of international outrage and condemnation, the Middle East is another explosive area in the world. It sure is, especially considering what's happened recently with the war of words and hostilities between Lebanon and Saudi Arabia. So very interesting indeed, all the different factors at play. And my feeling is that given that article, I think we're going to see probably gold hold steady. Earlier in the year, I predicted that gold would go up by the end of the year. Although I wouldn't really say how much, maybe around $1,300, and we're kind of flirting with that a little bit. And so it's kind of holding true, considering all the downward pressure and everything else that's going on out there with these other factors, and especially with the explosion of the cryptocurrencies and the stock market. and the overall feeling that we're in for some economic stimulus coming in the form of either tax cut, growing business, lower unemployment, and more investment into the American economy here. These prices for these precious metals are actually pretty impressive, all things considered. There, post your thoughts below. What you think? Where do you think gold is heading? And the lack of demand. How does that play into it? What do you think is going to happen? Do you think the prices are going to go down because of that lack of demand if it continues on the trajectory? Post your thoughts below. I'd like to extend the multitude of gratitude you all for watching and encourage you to please rate, comment, and subscribe.